Hi, this is Ben Proisich with Remax Above and Beyond, and welcome to your Real Estate Market Minute. Well, everybody is asking me, is this Middle East conflict going to affect our real estate market? And I am not here to talk politics, but I do want to try to break down for you what a Middle East war might do to interest rates, house prices, and your own decision making process on whether you buy or sell real estate. Um, it's interesting. Real estate doesn't really react to headlines. Uh, we more typically react to economic ripple effects in the economy. And things have to take place for a while and they have to almost become a trend to affect the real estate market. Whereas in the stock market, you hear about war breaking out or maybe Middle East war breaking out, and the Dow could drop 800 points in a single day. It just doesn't work that way in real estate. Um, there's sort of an effect, a transmission effect, I call it, of things that have to happen. And with this Middle East war, what's happening? Oil prices are going up. And that means that inflation is going to go up. And that means interest rates go up in an effort to try to suppress the inflation. And when interest rates are up, that drives demand down, which means prices either become flat or start to go down. And that process takes some time to go through the economy. It doesn't happen all at once. So, what has happened so far, and we're only about 20, 21 days into this conflict, interest rates have gone up from 5.9% to 6.2%. And that's driven solely by market participants, which is the Fed has not raised or lowered rates at all. They've kept them steady, but our mortgage market rates have gone up because the expectation is that there's going to be inflation. So they're starting to move up. And you might wonder, well, are you nervous about this? And I'm not actually, because we have some really good recent history on this. In 2023, the end of 2023, mortgage rates actually got up to like 7.7%. If you remember, in that year, the Fed was constantly raising rates in an effort to bring down inflation. And rates got as high as 7.7%, and there was really no demand destruction. In other words, here in Cleveland and our suburbs, we just kept chugging right along in terms of house sales. There was really no demand destruction whatsoever. So that is kind of my red line in the sand, if you will. I will get worried maybe over 7.8% that our demand could start to come down. Also, remember here, a mitigating factor is we don't have much supply on the market. So it's pretty easy to sell all our homes, even at higher interest rates, because we don't have much on the market in Cleveland. So what does this mean for you? It means that you should buy or sell, if that's what you want to do, and your family can afford like 6.2%. It means you should do what you want to do and not pay attention or be scared by the headlines, because we don't react to headlines. We react to the economic ripple effects that take some time to work through the system. So I hope that helps. And if you'd like to discuss any of this stuff, feel free to give me a call. This is Ben with Remax, and if you enjoyed this, please like, share, and subscribe.